I'm Alan Kinney, Editorial Director with REIT.com, and I'm at the Waldorf Astoria Hotel in New York for REITWeek 2014, NAREIT's Investor Forum. Joining me is Stuart Tanz, President and CEO of Retail Opportunity Investments Corporation. So, Stuart, you've been going through acquisitions lately. Give us an idea, what is the market like right now? I mean, how competitive is it out there? And how are you finding and sourcing the right targets for your acquisitions?
Sure. Well, the market is very competitive. Capital is readily available across all sectors in the market. But for Retail Opportunity Corp, our advantage is really being in the markets that we've been operating in, which is the West Coast. The fact that we've operated in these markets 22, 23 years gives us the ability through these deep relationships to find a lot of transactions off market rather than on. So it really is a competitive market, but for us, we've built our success on those relationships, and we've had a very successful growth profile at the company over the last 4.5 years. And the last year has been very, very active for us. In fact, Monday of this week, just before NAREIT started, we announced a very exciting transaction where we bought a property in Los Angeles called Fallbrook Center. $210 million. It was an off-market transaction. Bought it from General Growth. And again, shows you the ability for a company like us to source these transactions off-market and really through relationships more than anything else.
And one subject that keeps coming up in the retail sector, especially with all the rise in internet retailing, has been tenant mix. How do you make sure that you're getting the right mix, and what does that say about the stability of your company?
Well, tenant concentration is extremely important, and tenant mix is also very, very important when you analyze a retail center. For us, our focus has always been grocery drug anchored shopping centers. And the reason why we've only focused in that segment of the retail industry is because what we've seen after going through many recessions is that good or bad times, people have to eat. They need their drugs, And so when we've watched sales at our centers through these good and bad times, there's been very little impact as it relates to both the e-commerce threat, and more importantly, because it caters to the basic necessities of life. So tenant mix is all a function of what your tenants look like and what type of tenants you have. But for us, it's always been the focus of having grocery drug anchors as your anchor tenants.
As finishing up, you've recently been named to the S&P Small Cap Index. Can you give us an idea, what does that mean for your growth strategy?
Well, we're very excited to be part of the S&P Index 600, Small Cap 600 Index. And for us, it was important because it's another, it really broadens our investor base more than anything else. And by broadening your investor base, it really long-term helps you in terms of having a much stronger investor base. So it was exciting to be part of that index. And more importantly, it really gave us the ability to see a lot of volume in our stock in terms of the weighing in that index. And along with that, broaden our shareholder base. So we were very pleased when we saw that announcement come out.
All right, well, thank you very much for your time, Stuart.
Thank you.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.